Okay, this problem is asking us to review and to make sure that you're comfortable with the difference between the cash basis of accounting and the accrual basis of accounting. So the first thing it asks us to do is to calculate the net operating cash for year one. Well, net operating cash is cash collected from the customers minus all the cash paid out, irrespective of whether it's going to be for 2 years or 3 years or 5 years. So it's basically cash in minus cash out. And when we do that, we take the 152 minus 82 minus 26 minus 57.6, and we come up with 13,600 is our negative 13,600 is our net operating cash flow for the first year. Year two is the same. We're going to go through and do the same thing, looking at just the cash in, the 182, minus the cash out, 92 and 32. And year two, our net operating cash flow, or our results of operation on the cash basis of accounting, are 58,000. Now, because they ignore all accruals and all deferrals, they are not accurate numbers. And I said that it was minus, and it's not. I'm sorry, it's 58,000. It is not a negative number. So it's not true that we actually lost 13.6 last year, nor is it true that we actually made 58 this year. Okay? So let's take a look at an income statement, a GAAP compliant income statement. And now we're going to be taking a look at, it's not cash collected, but revenues. So we have 186 and 236. I'm going to do these at the same time so that you're not watching me flip back and forth repeatedly. So we start with revenue minus all expenses. So for year one, our expenses are salaries, utilities. But remember, the utilities, they tell us that the actual utility cost was 31, so that's the number we need to use, and 1/3 of the 3-year insurance policy. So when we do that, we come up with 82,000 for salaries. We come up with 31,000 for utilities, and we have 19,200 for the insurance. That's 1/3 of that insurance policy. So all of these are, of course, subtractions. And at the end of the first year, we made 53,800. That's the accrual basis. So you see the difference is pretty significant. We went from 13.6 in the hole to 53.8 positive. And that difference is just on the basis of the accrual basis of accounting. Now let's take a look at year two, and again we'll do it at the same time so that we're not flipping back and forth. We've got to pick up the revenue. We have the 92 of expenses, and notice that they paid 32 for utilities, but remember 5 of that was from last year. So we have to subtract that out, and we have to include this year's insurance, so that's 1/3, 19,200. We have our salaries, and that's 92. And we have our utility expense of 27. And when we do that, our accrual accounting income is 97,800. So you see it really is significantly different on the cash basis and the accrual basis. And those differences can be dramatic. This depends on collections, the net cash flows, operating cash flows, and the accrual basis is it's a better reflection of the business. And the next it asks us to look at the receivables from the year, okay? And we're going to go back to the original information they give us. And they tell us that no anticipated bad debts, and the insurance policy covers 3-year period. So the difference between what we collected and what the revenues were, that difference right there is $34,000, and that's our receivables for year 1. Year 2, our receivables, again, taking a look at the same difference, okay? But we have to look at, there are any receivables carrying over. And let's see, no anticipated bad debts, insurance policy. So the difference is, again, between cash collected and amounts billed, comes out to $88,000. Okay.